While many are experiencing the highest cost they've ever had in history, you can look at the data and try to assess it for yourself. There are things that have gone off the charts and will never come back down to reality, it seems. And there are others that show us inflation has peaked. Well, that's what we'll talk about first. Has inflation peaked, at least according to the statistics that they show us? The second thing I want to look at is the cost of living, because that's a real analysis of prices. Whatever stats they're going to show us are always going to favor their agenda. We want to know the truth. That's why you came here. And the third thing is oil and energy. I'll break that all down today. Let's begin. The stock market performed extremely well on Thursday's trading session after the suggestion that inflation had peaked. But there are some companies that are performing extremely poorly, and this has really been a case of several events leading up to the moment we are in today. One thing that I wanted to mention was it doesn't necessarily matter what's happening with the company's revenue and profits and all the estimates and the analysts around it. A lot of this has to do with what's happening on a macro level. When you look at quantitative easing, when you look at the stimulus provided by government, and when you look at the inflation statistics, it's going to tell you much more about what's going to happen over the medium and long term. Sure, short term you might have these fluctuations, but we need to look at it on a different level. Let's take a look here. Consumer prices rose 0.4% in October, less than expected as inflation eases. This is looking at a time in which we had seen constant and never-ending increases in the CPI and all the other metrics that they like to use. But it just shows you that things can change very rapidly. Hey, here we are. And now the stock market instantly favored that information. But is that enough? Is that enough to change things? Well, not according to Neil Kashkari. Kashkari says the Fed will do what is needed to curb high inflation. Well, we're talking about the Fed chief in Minneapolis. It's not just some analyst saying this, that it's entirely premature to talk about a pivot. He says that the Fed policy acts with a lag and central bank on a good path. Right now, they're on a good path, and they believe all of them within the Fed have basically said the same thing. We're not ready to pivot. We're not ready to actually cut interest rates, but we're looking at this information with the understanding that it takes a while for this thing to come into the present, and so we don't want to over tighten. That's important to note. But the stock market saw that information and they ran with it. One of the best days we've had in a long, long time. And you know that it's doing well when you see the most garbage stocks doing well. That's when you know things are good. It's not just a few names, hey, Apple's doing well. It's all the garbage too. Here we have peak inflation in Europe is almost within reach. So we see this with the Fed in the United States and the ECB saying the same thing for Europe. But Europe is a very different scenario, despite what they're willing to tell you here. Eurozone headline inflation hit a new historic high of 10.7% last month. They're going by 75 basis points. They are increasing rates at levels we never imagined. I mean, they were negative and now suddenly we're in the positive. We didn't think that would ever happen, but here we are today. Now, this is just showing us that these statistics aren't always going to match up with reality. What is most important is right here in this chart, and that is US real average weekly earnings. You could see this essentially when you factor in inflation and combine that with the average hourly earnings. Are people doing better or worse? And month after month after month after month, they're doing worse. Because even if inflation is slowing down, it's not stopping and it's not going away. It just means that it isn't going up at the same pace it was before. I don't think people realize this. Because if your situation is okay and you're all status quo, that might be fine. But for a lot of people, it's not the same. Look, inflation is a year-over-year statistic. So what happens if it's, let's just say, 0%? Well, the price increases from before didn't go away. That's not how it works. And suddenly, people seem to ignore that absolute fact. One that doesn't seem to ever be stopping is shelter and rent inflation. Year over year, just off the charts. Just crazy when you see it like this. But this is seemingly relentless at this time. UK grocery price inflation hits a record 14.7% and still too early to call the ceiling. Own label sales have jumped again by 10.3% over the last 4 weeks. So we have to understand what people are doing, what shoppers are doing, and how they are adapting to the price increases. A lot of them are cutting out the foods that they actually need. And that's when it becomes unfortunate. Okay, so we'll talk more about that at the end. I want you to stay into the end of this video because I'm going to be able to get into some information that you really need to understand. I will wrap that all up in the last section. Quote, it is likely that food inflation will continue to increase as macroeconomic indicators have shown little sign of slowing down in price growth while consumers continue to struggle with the ongoing cost of living crisis. That's where we're at today. Whatever number they want to give, if it's 10.3%, 10.7%, 7.1%, 150%, it doesn't really matter. What matters is you, the individual. Give it a number, doesn't matter. You can look at shadow stats. You can look at true-flation, TRU-flation. There are different sources that do different calculations. Ultimately, it means that when you break it down in your own basket, that's your inflation rate. Okay, there's always going to be different numbers, but it doesn't really matter. What matters is you. Nearly half of UK families are left with less than £3 a week. Wait a second, what? We're talking about nothing. At the end of the day, or in this case, at the end of the week, they have nothing left. And so what happens? Well, of course, they use their credit cards. They put it on some form of debt. And that isn't good when you have high interest rates, right? Because they can't pay that back. It's impossible. And you create this spiral down. And people hopefully will not fall into this trap. The one unfortunate part of that is, you see, as we go through this cycle of layoffs, hopefully those cycles will not be too long, will not be too deep. But if they are, what happens is that eventually companies will hire again, especially the big companies. And so during that process of rehiring, they have to look at it and they have to address whether we want to hire humans or maybe we hire robots and apply some level of automation. This is one example here with Amazon's new warehouse robot that could one day replace humans. Sparrow, to advance safety in injury-plagued facilities, company also unveiled new slimmed-down drone design. This is important because what we have seen with Amazon, I believe the article tells us that they have something like 1.5 million employees. I think they're the second largest employer. The 1.5 million is a global level. But you could see that there are a lot of jobs. A lot of them are warehousing jobs, not necessarily glamorous, but these jobs here, they're trying to figure out a way to replace those jobs with robots. So the robots are already in the workforce there and they're moving all the different skids around and they're making these things happen and they make the job of the human easier, but ultimately they want to get rid of that and then they want to get rid of the driver who takes those products on those trucks to bring them over to the sorting facilities and where they get distributed. If that gets removed by all the autonomous driving, if that ever happens, then that's another aspect. Each step of the way trying to remove the human from the situation. Why? Because the human is trying to get a better wage, because the human is trying to unionize, because the human is calling in sick and they don't want this and they want that and they're complaining and they have all these things and all these issues that arise. And so you've got an actual group of people that maybe will not have jobs in the future. That's the way it's looking. You got Flippy the robot, you got Chippy the robot. These are real things, believe me. And so they can't really fix this issue in this time because the robots and automation are advancing so fast. How will they ever turn it around? Then we have this really quickly. Want to show you that oil tankers to see the biggest demand surge in decades. So while we have seen some form of freight that has declined, it seems like oil tankers, not the case at all. Okay, so we have the energy factor here that has shown us that this is one thing that is always going to be a bellwether. So pay attention to oil very closely. That's just one aspect. Gas and electricity bills nearly double in all EU capitals. That's, of course, showing us that not just in the EU capitals, but in what seems like everywhere, the prices of energy have gone up so substantially. In this case, you could see energy bills in Europe are 90% higher than last year. This is inflation that doesn't really fix itself and certainly will not be resolved anytime soon. Are they going to get a contract on the Nord Stream or the Nord Stream 2 pipeline to bring that gas in? Is that going to happen? Is the energy they're trying to bring from Qatar up into Europe actually going to occur before 2025 or 2026, whatever it was? These things don't look likely, at least in the near term. That's so important to me when I look at that. And how are we ever going to address this? We just have to kind of sit around and believe that it's all going to be done in due time. I really don't think that people understand how serious this is. I want to break it down right now for you. Let's take a look. It's not just all about the news. We need to understand what we can do about it. So let's look at that. First, we'll break it down, and then I'll tell you what you need to know. Many people have been pushed over the edge as wages have fallen way behind on inflation. That's apparent basically everywhere. We can see that. It doesn't matter if it was, remember used cars were a big problem for a while, and then we had food and energy and everything else. Energy seems to still be an issue for a lot of people. Objective for many has been to cut expenses and hope that inflation will subside. It's just hopefully inflation's going to go down. But it doesn't really work like that. Always remember that inflation is a year-over-year percentage. So if it comes down, prices don't fall with it. That's so key. If the inflation rate goes from 8% to 7%, it doesn't mean as if the price had gone down by 1%. That's the year-over-year increase. So the price is still increasing. It's just the pace at which it is slowing down. So we've got to watch out here the way that it's calculated, because that really messes up with our mental. Find a way to bring in more income if at all possible. Learn a new skill or teach something you know. There's a website called OutSchool, I believe it's called outschool.com, where you can actually be a teacher on there and teach what you know. It's usually teaching kids, and you could get into any type of subject, whether it's math or geography or art, anything. Check it out. That might be an avenue for you, for some people anyway. And I always just trying to bring you new things and solutions, and trying to look at the alternative, because you can just work more hours at your employer. That's one aspect, but there are other ways to do it too. Okay, so check out outschool.com. Create connections with people as best you can, locally and online. Your network is a valuable asset, and it's, in my opinion, a highly underrated asset, highly underrated. So do so, because I think, in my opinion, that's the one where you're going to get a big return on your investment, okay? Did you find this video informative? Hit that subscribe button down below, and I'll see you tomorrow.